Hello there, and now we are ready to get started with the introduction to basic Forex, some of the terminology we use, the different ways you can make income with Forex. Those are the points that I will be covering in this video. But before I get started, I always like to share my website with everyone. That's rickrayfx.com/profile, where you can go to find out more about me and more about Forex trading. So as we get started into this first main video with the introduction to basic Forex trading, the first thing you need to do is to sign up with a Forex broker. And of course you want to choose a reputable broker. There are thousands of Forex brokers available, but there are some cowboys. So you want to be careful in choosing your broker, and of course the best way to choose a reputable broker would be based on the advice of an experienced trader. I have used several different brokers, some of them not so great, all right, but the broker I've been with for 6 years, and I use another broker also that I've been with for this entire year of 2023. So you can follow my recommendations and be assured that you will be using a good, reputable Forex broker. And of course, any broker you sign up with, it's going to be KYC. That's just the world we live in. KYC means know your customer. So for that, it means that you will need to submit 2 documents. The first one is a POI, or proof of identity, and usually a passport will work just fine for that. Or if you're in a country where you have a country ID card, a government issued photo ID, that will work as well. But when you sign up with a broker, you get to that page where they ask for the documents. They will explain what type of documents they accept. And then the second document that you need to submit is a POR, or proof of residence. And that can be a credit card statement that you receive at your home that has your name on it. It can be an electricity bill. It can be a bank statement, and that one works quite well because with the bank statement you have the bank logo on the page with your name and your address. All right, and it's easy to print a bank statement or just to receive a bank statement with a smartphone. So that's usually the easiest way for proof of residence, is a bank statement. It doesn't matter how much money you have in the bank, that's not the concern. Just the first page of your bank statement with the bank logo and your name and address. And be sure that you sign up with the same address that you're using for the proof of residence. They must match. And then you wait for approval. Okay, and if you're doing that Monday to Friday, usually it's done within the same day, or maybe more than one day. Maybe you receive approval the next day, but it's usually fairly quick. And then once you have this done, signed up with a broker, this will enable you to access a website. You can call it a back office. This is where you have access to download the MetaTrader 4 software, where you can deposit funds. You can download the software and open a demo account for practicing, or you can fund a live account. The approval with the broker gives you access to all the tools that you will need to be using as a Forex trader. All right, so let's get started with, first of all, what I will share with you is the multiple ways that you can make income from the foreign exchange market, and it's not just by trading. All right. The first way, of course, is manual trading, and that's where you have a laptop or a tablet or a smartphone, and you analyze the charts, and you click buy or sell, you make the trade. That's manual trading. You do it yourself. You do it on your own. But of course, after you've learned how to do that, all right, that's manual trading, which is where everybody should get started, okay, because that's where you learn how the market moves, you learn the fundamentals, you learn the technicals, and you start with manual trading. And usually people start on a demo account. A demo account being some people call it a paper trade account, and that's where you have virtual money. It's the same as a live account, except the money is not real. Okay, it's money that you can just practice with. If you lose it, it's not your money that you lost. All right, and that's usually the best way to get started trading Forex. So manual trading is the first way to make income from Forex. The second way we call semi-automated trading. And this is where I introduce my buddy to you, Mr. Robot, okay? Automated trading. And I even have a dedicated website for that, as you see on the screen there, https prosperityrisingea.com. EA means expert advisor, which is the terminology we use for a robot in Forex trading. prosperityrisingea.com, and you can go to that website to find more information about semi-automated trading. The third way you can make income from trading is by copy trading. All right, most brokers have a platform for such type of trading. With this broker, it's called CopyPip. Some brokers use a platform called CopyTrade or social trading. It's all the same thing. All right, and this is where you go to that platform and you find a list of strategy providers, of experienced traders. You see what they're doing, you see the income they're making. It's totally transparent. And this is set up for people who don't have time for trading, or either they're not interested in learning how to trade. All right, so this works very well for them for copy trade. But anybody can use this type of income, this type of resource to get income from the Forex market. And usually what will happen is that people who begin and they start learning and taking a course will start with copy trade, because this gives you the chance to go ahead and start making income from a copy platform while you are learning, while you are developing your own skills to become a Forex trader and learn how to win consistently and start making profit on a regular basis. Copy trade is a great way to get started with that. And then the fourth way you can make income from the foreign exchange market is to partnership with a broker. All right, and all that means is that you have signed up with a broker, you have a referral link that you can give to your friends. Your friends see you trading, they say, hey, I'd like to try that, I'd like to get started. You say, okay, I have a good broker that I'm using, and I recommend that you sign up with them. So you give them your referral link, they sign up with you, they sign up under you, so you start to build a small network of traders under you. All right, and why is this good? Because when your friends trade, the broker pays you commission. Now, if your friend makes a losing trade, it's okay, the broker pays you commission. If your friend makes a winning trade, the broker pays you commission. If you don't trade, but your friend trades, the broker pays you commission on all of your friends' trades for the rest of your life, forever. So this is a great source of passive income. This is the fourth way to make income. Some people are not interested in this method. All Forex brokers provide this. All right, all Forex brokers provide a referral link so that you can refer your friends to them. And this is how the brokers make money. Every trade you take, you will pay a broker fee. So the broker says, okay, thank you very much for introducing your friends to us, and they pay you out of their pocket. It doesn't affect the profit or loss of your trade or of your friends' trades. All right, so those are four ways that you can make income from the foreign exchange market. Now let's look at what is Forex. Okay, some people have never heard of Forex, some people have heard of it and don't know what it is. So basically, let me explain just what Forex is. It is a very decentralized market for the exchange of currencies. All right, it's a global decentralized market. There's no place you can go where that's where Forex is happening. All right, this includes all buying and selling, exchanging of currencies. Okay, and Forex is the largest financial market in the world. Now, everybody thinks that Wall Street, we've heard of Wall Street, that's the New York Stock Exchange, NASDAQ, S&P, and all of that. Everybody thinks that Wall Street is the largest financial market in the world, but it's not. Okay, Forex is. And I'll show you the numbers to back up that statement in just a second. But there's no Forex Street. Okay, there's no place where you can go where people are you know, it's the headquarters for Forex. Like Wall Street is the headquarters of the New York Stock Exchange. Okay, there's no such thing as Forex Street. It's a decentralized global market. Forex transactions are worth trillions of dollars, not billions like in the stock market, trillions of dollars. And this takes place every day. And it's not like stocks or commodities. There is no central exchange, as I just mentioned to you. Instead, currencies are traded by a global network of banks. You may have heard of the Federal Reserve of the US, the Central Bank of Europe, Central Bank of Australia. All of these big global banks are trading and exchanging currencies. Currencies are exchanged by dealers, brokers, importers, exporters, retail people like you and me, big companies. You think about it like this, like if some country wants to buy oil from the United States, well, they have to pay for that in dollars. Well, where does that country get dollars? From the Forex market, from the foreign exchange. All right, and this goes on all the time, all around the world, Monday to Friday, except holidays. Now here's the statistics for the foreign exchange market. All right, Forex trades $7.5 trillion every single day, compared with the stock market, which trades about $230 billion per day. That is a huge, huge difference. Forex trades $312 billion per hour, every single hour, 24 hours a day, Monday to Friday. Compared with the stock market, trading $230 billion per day, Forex trades $312 billion per hour. And if you break that down, that's $86 million every second being traded on the foreign exchange market. It is a huge, huge amount of money, and that makes Forex the largest financial market in the world. So the question is Forex risky? When I went back to the States a few years ago, I let people know, my friends, that I was a Forex trader. I hadn't seen them for many, many years. I don't live in the States anymore. And I said, yeah, I'm a currency speculator. I trade on the foreign exchange market. They said, oh, that's risky. No, it's not risky. All right, people are risky. Forex is not risky. Let me explain. There are factors that influence the volatility of Forex, and volatility in Forex is good. Prices are influenced by many different factors. Okay, the factors that influence the economy of various countries, such as interest rates, inflation, government policy, employment figures, all of this data that is released on a regular basis, plus hurricanes, tornadoes, earthquakes, wars, all of these things influence the movement and cause volatility in the foreign exchange market. But that doesn't make it risky. Because of just the sheer volume of currency traders that are trading that $7.5 trillion every day, this means that price movements can happen very quickly, making currency trading not only the largest financial market in the world, but also one of the most volatile. So yes, Forex market is volatile, but it's not risky. People are risky. People get into Forex trading and they trade based on emotion, based on greed, based on hope. They overtrade. They trade too big. They trade too much. They use a small account. There are many things, many reasons why people are not successful as Forex traders, but not because Forex is risky. People are risky. Now, in this online course, I will teach you risk management. So there are inherent risks involved. You can lose money. You can lose your entire account. But if you will follow the risk management principles that I will teach you later in this course, you will find that you can trade as long as you want without doing what we call blowing up an account. All right, so there are techniques and procedures you can learn that will help you to manage your risk, and I will teach you those. And here's the great thing that I like about Forex, because I live in Southeast Asia. I used to trade on the New York Stock Exchange, but that, because of the time zone difference, it made it very, very difficult. But Forex is open 24 hours. 24 hours a day, Monday to Friday, except holidays. So 5 days a week, 24 hours a day, you can trade on the foreign exchange market. And what we trade are the currencies, which are always traded in pairs. This is just one example, the Euro-US. This is the currency pair that is the most highly traded in the foreign exchange market, and in fact accounts for about 28% of that $7.5 trillion. Now, there are different time zones where different markets open up, although you can trade any market 24 hours a day. Imagine it like this. We have a zone called Asia Pacific, and that includes New Zealand, Australia, Japan, Singapore, those countries. All right, that's what we call the Asian Pacific market. Then you have the Europe, Switzerland, and UK market. That's what we call the London market. And then, of course, you have the US market, which some people call the New York. So 3 basic market areas or zones: Asia Pacific, London, and United States. And you can trade any currency 24 hours a day, whether if you're trading in the Asian Pacific market and you want to trade the US dollar, you can do that. If you're trading in the US market zone at that time opening and you want to trade the Australian dollar, you can do that. These are just a breakdown of the different times of when these particular markets in that part of the world open up. Now, if you'll go to this website here, this is not a hyperlink. You cannot click on this link and open the web page, but you can pause this video and write down this website address. This is a very nice Forex clock. So this will read the regional settings you have in your computer, and it will tell you what time it is and which market is open according to the time zone that you live in. These times that you see printed on the screen here, these are the times that I use in Southeast Asia where I live. So your times, if you live in the United States or Canada or Bangladesh or Dubai, your times will be different for these various markets. Now we have 8 major currencies. Okay, these are the major currencies that are traded on the foreign exchange market. Every country has a currency, and you can trade any currency you want, but these are the major ones: the US dollar, the euro, the pound, the Swiss franc, the Japanese yen, the Canadian dollar, New Zealand dollar, and Australian dollar. And what we have is 8 major currencies, but we have 7 major pairs. Remember, currencies are traded in pairs. So if you're trading the euro US, the pound US, the Swiss US, if it has the US dollar with it, it's considered a major currency pair. So that's what we have is 7 pairs: the euro US, pound US, Swiss US, USD JPY, USD CAD, New Zealand US, and the odd US. And just as an example of what these symbols mean, if you were trading the euro US, the euro is the base currency and the US is the counter currency. And in this particular example, this would mean that for 1 euro, you could buy $1.35 US. And this screenshot is obviously quite old because that's not the rate that we're using at the time of making this video. But these symbols you see, euro US, it's always that way, it's always been that way, and it does not change. One client asked me one time, I cannot find the USD EUR. Well, you cannot find it in Forex because it doesn't exist. All right, you cannot swap the base currency for the counter currency. They are always like this: the euro US. The euro is the base currency, US dollar is the counter currency. And the way we make money in Forex is very, very simple. We buy and sell. That's all we ever do, buy and sell. It's different from stock trading. Okay, if you are investing in stocks and you buy Apple stock, you will probably want to hold that for 10 years and then cash out at a much higher price from the growth and development of that company. Well, you don't buy the euro US and hold it for 10 years. Okay, currency just fluctuate in a tight range. So we either buy and sell. You can buy and sell for a day, all right, or you can buy and sell and hold for a week, or sometimes a long trend will be running where you could buy and hold for several weeks. But generally, you just buy and sell, and that's why people call this day trading. You're in and out. And there is something called scalping where you're in and out in just a matter of a few minutes. But that's all that we do, is buy and sell the currencies. And if the trend is buying, okay, that means the trend is bullish. If the trend is selling, that means the trend is bearish. So we have bulls and bears, always fighting over the price. Bulls trying to push the price up, bears trying to push the price down. Here's a little bit of the terminology we use in trading, long and short. A long trade is when you're buying a trade. And you'll always have 3 points with your trade. You'll have the entry price. You'll have a stop loss below your entry price if you're buying, all right? That protects your account. If the trade should go the wrong direction, you would be stopped out of the trade with a small loss. And then above the price, you have a take profit. You set a goal where you want to exit the trade with profit. So always 3 points in any trade. This is a long trade or a buy trade. Short trade is the opposite. We are selling. All right, so you have your entry price, and then above that you would have your stop loss because you expect the price to go down. If the price did reverse and go up, then you would be stopped out of that trade with a small loss. And then below the price you have your take profit or your goal where you expect to exit the trade. 3 points in both a long and a short trade. So long and short. Long equals buy, short equals sell. All right, that's it for this short video. I hope this has been helpful to you. Many people will already know what information I have gone through here, but some people don't have a clue about Forex, and so that's why I start very basic, all right, to explain these simple things. And in the next video, we will get into setting up the MetaTrader 4 software, a very powerful software, which is the most globally used trading software for Forex. MetaTrader 4, which can be used on a laptop, on a tablet, or on a smartphone. However, I recommend that you start with a laptop because it has a bigger screen, easier to see. You can add more to your chart analysis, and you can easily customize it the way you want. All right, so I'll see you again in the next video.